Hello and welcome to the preview for today's Bank of England August quarterly inflation report. Now just a couple of points of focus for today's release, first of which being the forecasts out of the Bank of England economists in terms of growth that is expected to be revised higher for the forecast horizon. That's to reflect the recent better data we've seen out of the UK, with PMIs showing that the manufacturing, services and construction sectors are actually growing faster than previously forecast, showing a pretty broad-based structural and not cyclical recovery. So good news there for the UK economy. Secondly, inflation is expected to come back towards that 2.0% CPI target faster than previously forecast, as the past quarter or so of inflation data out of the UK has in fact come in below analyst expectations. But the main focus of today's release likely on any conclusion to the forward guidance assessment that the Bank of England have been conducting over the past few months. So Mark Carney and his Monetary Policy Committee are expected to enact upon forward guidance, which could take one of two forms. The first of which being a relatively vague and grey ECB-like forward guidance policy, in that they are looking to reassert to markets that rates will remain low for a unspecified period of time in the future. However, economists, politicians and parallel central banks have been favouring a bit more of a threshold-tied forward guidance policy. Now it remains to be seen whether it could be tied to some sort of metric, for example the unemployment rate or possibly growth figures, so let's see how Mark Carney does sway his board. Nonetheless, this is seen as a pretty big day for the UK asset classes. It is worth noting that futures markets were pricing in the next rate hike out of the Bank of England in late 2016. This was before the Federal Reserve put a bit of a spanner in the works and threatened their QE tapering, which of course had a pretty global effect on markets. So expectations are today for Mark Carney and the Bank of England to try and steer that rate path back towards that pre-May 22nd level in terms of monetary policy expectations. So those releases out of the Bank of England due at 10:30 London time, which will bring you as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic day.